China. The tariffs, which Greg North Hero, our FX specialist, was all over yesterday, was that they were going to be imposed overnight. The market yesterday did not have a reaction to that in any way. So it was, it was hard to stay short, but we were able to do that. We thought the reaction would come more on the close, but it didn't actually. There was some small stock to buy, and the market closed a bit firm until Tesla's earnings, where it came in 5 points, and we covered half the S&P trade and left half. So, the trade worked out, but it didn't really work out even through the Asia time zone. It really happened in Europe. So the news out of Europe today was that the Bank of England raised rates 25 basis points, and they seem to be hawkish, but the first reaction in the pound was that it rallied up through 131, and then in the last 15 minutes it reversed. So I guess there were some comments, or the market was taking that they weren't as tight. But looking across the board in the DAX, down about 1.5%, the FTSE down 1.25%, and the CAC down 60 basis points. Going back to Asia, those markets got slammed. They were down anywhere from 2% in China to 1% in Japan. So the tone was set early. The markets were weak. The S&P held up pretty much until right before the European Open. So it kind of made it through the Asian time zone. But once Europe opened and reacted to the tariff news, they hit those markets. Looking across at our markets, the S&P is down 16 points right now, about 4 points off the low of the night. So the trading looks to be good. Volatility is up about 8%, which is kind of in line with what's usual for this type of move. And looking at the straddle, for the first day this week, there is not an option expiration. There was one Monday, Tuesday, and Wednesday. We had the Wednesday expiration, and then the Tuesday month end. So we've been busy with expiration. Today will not be that busy, but looking at the pricing across the spectrum, the puts in the indexes on the downside are pricing in a significant move. Maybe there's a lack of protection out there from the players, but I haven't seen prices this elevated in a bit of time. So I'm expecting there to be some good action today and into tomorrow. And the spreads we'll be looking at are around doing some put ratio spreads and butterflies, to doing some call ratios, and maybe look at the straddle. The straddle's pricing in about a 1% move for the next 2 days, which is higher than usual. So I think there'll be good opportunity created there. Going across to the bond market, the bond market still looks weak to me. It is up slightly. The 30 years up about 13 ticks, and the 10 years up about 5.5 ticks. I would have expected a bigger move basis the tariffs and the moves in global equities. So probably can still lean short that. And overall, oil is down about 1%, a little less. I think it's holding up pretty well. It's been both sides have unchanged on the week multiple times. So I think it's a choppy trade there, but we'll keep an eye on that. And I'm going to pass it off to Vince to talk about gold and broad markets.
Vince, you there? Vince isn't there.
Hey, I was muted. We good now?
You're on.
Okay. Good morning, Larry. Good morning, everyone.
Just briefly, wrapping around the globe in terms of drivers of the markets, as Larry said, tariffs weighed heavily, starting in Asia. Uh, the Chinese and Asian markets, especially China, would suffer more from tariffs, at least initially, than the U.S. They don't have as well developed a domestic demand market as we do. Uh, so basically all of Asian markets plunged, as Larry uh, stated. Moving over to Europe, European markets also sold off. That's even before the Bank of England made their statement. Uh, the mining sector was hit. That's apropos of nothing except that I think mines in general are poorly run. That's an opinion there. Uh, the Bank of England did a dovish hike, uh, and cable rallied initially, but then as the conference started, I guess the rhetoric seemed even weaker than normal. So cable has reversed. Uh, on the equity market, on the U.S., we are lower, probably in part in sympathy with the global markets that have been lower before it, and part because of our own domestic situation. And by that I mean a little bit of confusion. We're also post the end of the month. People are liquidating. Uh, Tesla's surprise to the upside, whether it be real or manufactured, did not really help the markets. Moving on to commodities, you'll see oil has dropped 1%. Tracy had mentioned that we did have some room below yesterday, if you were online. Possibly a bounce here, I think is something she iterated, but the macro seems to be lower. Moving to the metals, there's a slight divergence. We were short. We'll talk about that trade in a second. We were short silver, but there's a slight divergence. Silver, gold, copper, platinum. That whole uh, class, if you want to call it one class, uh, has been choppy overnight. Silver being the strongest of all the metals, and of course, that is the one that we were short. Uh, the metals have really no direction except lower, despite the fact that the commercials are now long and the specs are now short. So the market is oversold, but needs a catalyst to go higher. With regards to the trade that we had on, at least at Echo Bay, we were short silver with a stop at 1547, which went off this morning. While that stop went off, closing us out, it's actually a volatility indicator saying that the market should get more volatile, and it suggests reversing. We did not reverse. However, we're considering getting back in based on the tightness of the stop and the fact that the other metals are not as strong. Uh, all in all, there's probably going to be some opportunities to make and/or lose money, depending on how you trade. If you're trading volatility, uh, to speak to Larry's Tesla trade, in 3 out of 4 scenarios, that trade makes money. The market goes down, it makes money. The market goes up and stops at a short strike, it makes money. Market moves sideways, it makes money. Right now, it's the fourth way, which is not profitable. But 3 out of 4 times, that type of trade makes money going into earnings, and the dust hasn't settled on it yet. Uh, that's it from me. What do you think? Anything, Larry?
Um, yeah, I think today the focus will be, for me, as it always is in the S&P. I'm glad to see that it's had a decent overnight move. The market's trading at 27.96 here, about, like I said, $5 off the low. Um, it's going to be interesting to see how the stocks open because I'm looking at my board and stocks are down anywhere from 30 to a percent. I don't see anything really down all that much. The EEM, the emerging market indexes, are getting smoked. They're down anywhere from 2 to 4% pre-market. So keep an eye on that index. That's really what I would cue off of today. I would cue off of emerging markets, see if they firm. Looking at the S&P options, especially for Friday, I'm looking at some downside strikes in the 2760s, which is about a percent and a half away are $2 bid for pretty much the world. So, people are seeking protection. I think it's not expensive protection, for 2 days, but they're definitely seeking protection, which they have not done, which could create some more volatility. Banks are also something to look at. They may not hold up too well in what's going on here with rates firming a bit and global uncertainty. But, looking back at yesterday, it's shocking to me that we sat here and I was talking with Greg North Hero for a bit yesterday, and he was chatting it up on the site about the tariffs and that they are coming, and the market kind of ignored it. And even into the Asian trade, when Asia was down, it was ignoring it. I was up a bit late last night watching, and that was shocking to me. But sometimes these trades and the way the market's sort of changed is it's almost like a false move. So when you're looking for something, which we were, the move actually occurs after it happens. It looked like everybody covered in there, and then we had the move. And it's funny to me, being in the business for so many years, that we're looking at a 16 handle move on a $2,800 product, which is 60ish basis points as a big move. But I guess in the realm of computer algorithms and what's going on with trading, this is how it goes. Also, we're in the dog days of summer, beginning of August, so most people are not at their desks. So, sometimes that creates more volatility, but sometimes that basically mutes a move. So, the cue today for me is the emerging markets in general, see if they can hold, the banking sector, and then, looking at volatility across the board, both in the S&P and, the broad market. What I'd like to just say to everybody out there that's listening to us is, myself, I trade futures and futures options and some equities, but I know a lot of our viewers may only have an equity account. So any trades that I put on in the S&P, we're going to try to equate those trades to trades in the equity indices like the SPY to make it very vanilla. So you can create a long short in your equity account using the SPY. So I'm going to try, because it correlates 100%, to give levels in the SPY as much as possible. So people out there that are using just equities can trade the equities. And, that's
Right.
sort of my look.
We'll give the ETF levels to help them parallel. Definitely. I understand what you're saying there.
Yeah. So that's it. The currency markets are moving today. I would expect Greg to be all over that because he's probably one of the best currency traders out there, and both informationally and with his trade vision. So I see that market to be a bit busy. I try to stay away from that. He's our expert on that, so I'm sure he'll be coming with ideas and ways to trade that. And, you basically have gold, handled, and, that's sort of it on my end.
Right. Just to add a final thing, your comment about the options in general, a lot of people not familiar with, the dynamics of, the subtle dynamics of options. Implied volatility increasing as the market goes down in the stock market is not a prediction of the market going lower. It is a comment, though, that underhedged longs are panicking for puts, which could snowball into a lower move. What it does do is when people that are not already in the market see implied vol increasing as the market's dropping, it makes them want to jump in. And that's actually a tough time to play that because it's a double-edged sword volatility. The market rallies in stocks, volatility will come in. And this is all because the market is dominated by longs who need to buy puts and want to sell calls. So it's not something you want to jump in impulsively and buy puts because volatility is up. You want to buy these things when you can, not when you have to. If you're playing for the downside, that's what I would add to the whole volatility concept.
For sure. I just wanted to let everybody know today at 12 o'clock, we're going to have Bryn on giving a webinar in the oil sector. She is very, very talented technically and fundamentally, and I think everyone out there will learn a lot from her insights into the space. So I would hope everybody comes on at 12 and listens to her because she's very insightful.
Look forward to it, Larry.
Okay, we'll check back in before the opening, everyone. So those are our insights.